Hello, friends. I'm back. Now, in this session, we are going to speak something about the structure of Indian banking system. So, when it comes to, like you see, when we are looking into banking as a career, we need to understand what type of banks do we have in our system. Okay, so let's go forward. So, you'll find that we do have Reserve Bank of India at the top. The Reserve Bank of India is also called as Central Bank or Apex Bank of India. Apart from Reserve Bank of India, you see there are some other developmental agencies who are also given the tag of Apex. I'll name some of them like National Housing Bank, NABARD, which is National Bank for Agriculture and Rural Development. Then you have Exim Bank, Export Import Bank. Okay, so you see these are some of your Apex body who are assisting Reserve Bank of India as a representative. Okay, so they represent RBI and then they deal with different commercial banks when it comes to reporting and like you see tracking targets assigned to various banks. Now, next category of banks that you have in your system is like scheduled and non-scheduled bank. Now, you see this usually comes in an exam. What is a scheduled bank? So, scheduled banks are those banks which are mentioned under the second schedule of RBI Act 1934. So, you see, you can get a Bear Act for RBI 19 in this particular act 1934. So in that Bear Act, when you go to section 2, okay, under section 2 the list is clearly mentioned. Now these banks are clearly defined as scheduled commercial banks. So every bank is not a scheduled commercial bank. I'll differentiate this scheduled and non-scheduled bank in next one of my next slides. So we'll discuss it in detail there itself. Now the third category that we have is like you see this is not the third classification, but this is again what I'm trying to tell you is like how we are classifying our banks in India. So this is like on the basis of their background. Like let's say public sector banks. So you see this number 21 is before your merger and like acquisition which happened in recent past. Now you see it has come down to 12. The numbers have reversed from 21 to 12. So nine banks have been merged up with other stronger public sector banks. So this is leading to like you see if you look into Narsimhan committee recommendation in late 1990s, what they suggested is actually being implemented in year 2020 22. Okay, so this is the time period of restructuring consolidation where small banks are merged up together to make big banks who can compete with global players, and this gives them some sort of better sustainability meeting with this tough competing environment. Okay, next is like you see you do have nationalized banks. Like nationalized banks means these are those banks. You see, public sector banks are also they are actually under government control, so they are actually called as some of them they are called as nationalized banks. Now, nationalized bank means they have been converted into a public sector bank from a private sector bank. So conversion was there, hence they are defined as a nationalized bank. Okay, so and then some of the new era public sector bank is like IDBI. IDBI now is like mainly taken care by LIC because major investment is like LIC is holding major investment in IDBI bank. Means this is one segment which is public sector bank. Then second segment under commercial banks is private sector banks. Now you see private sector banks are classified into two category. One is new generation, which these are those banks which came into existence after 1995. Okay, the first new generation private sector bank was UTI Bank. You must have seen. You must. I don't know. If you check on Google, you'll understand there was a bank called as UTI Bank. Now it is not there. The name is not there. Rather, you see, there was a controversy between UTI and UTI Bank regarding this particular name and logo which they are using. Hence, later on, through court intervention, this UTI Bank name has changed to Axis Bank. So, Axis Bank is your first new generation private sector bank, followed by ICICI, HDFC, Kotak Mahindra. They all are new generation private sector banks, very aggressive. Whereas you see, if you look into old generation private sector banks, you'll get banks like Federal Bank, South Indian Bank, okay, Karur Vysya Bank. They are old generation. So they are already there into market for last almost 90 to 100 years, 90 to 100 years, they are into market, but in private mode. And during the era of nationalization, they didn't merged up with, like they were not taken over by government of India. Okay, maybe their scale of operation was less. Then followed by foreign banks. You see, foreign banks mainly you'll be finding them in metro locations, like you will find them in Bangalore, Mumbai. They'll be there in Pune, Gurgaon. So they don't come everywhere. Okay, they don't open up everywhere. They have very limited number of branches. let's say less than 10 or so, and they are concentrated only in these metro locations. The reason for their presence in India mainly is like they are very, very important when it comes to foreign remittances. Indian banks may take more time, but foreign banks they are very fast. Okay, because they most of their network is outside India. So if they need to send something from India to some other country, their network will facilitate that those transactions faster. Okay, so Indian banks have to rely on these foreign banks when it comes to remittance outside India. So then we do have regional rural banks. Again, regional rural banks and cooperative banks, they are giving strong support to your overall economy when it comes to like bringing in balanced regional growth, or let's say backward areas. They need some special attention. So for that reason only we brought in these banks. So you can see the same schedule here: types of bank: scheduled, non-scheduled, under scheduled. You have you see we have commercial banks, cooperative banks. Under cooperative bank, you have urban cooperative and state cooperative. Under scheduled commercial bank, you have public sector banks, private banks, foreign banks, small finance bank, and regional rural bank. So we'll be speaking more on payment bank and small finance bank in a short while. Okay, so RBI, it came short, just a fast forward review of what is RBI. RBI came into existence under this act, RBI Act in 1934. RBI started its operation on 1st of April 1935. It was destined that the RBI will be the central bank of India. So they have monopoly over note issue. So any sort of new currency notes to be published, demonetization, or some similar sort of decisions, the only authority who is competent enough to take such calls is your Reserve Bank of India. Then you see taking over imperial banks altogether, merging them all together. So you see RBI came up with these imperial banks. So nationalization is there on 1st of January 1949. Little bit late, but once it is nationalized, it is under government control. So even today, you see lots of debaters on regarding the autonomy of RBI. So government is compelling RBI to do lots of things which otherwise it might not have done if they might have been an autonomous body. Okay, even though you see RBI and government in center needs to work in coordination, else it is not possible to take your economy faster. Now you see here we have mentioned those this difference between scheduled bank and non-scheduled bank. You see one difference is like second schedule of RBI Act has it clearly mentioned which are the banks coming under this category. Second is like there is a minimum capital requirement of 5 lakhs. As on day, if you look at current scenario, 5 lakh is nothing. But you see, this is like certain rules which are mentioned in this book since a very long period of time, since the inception period. So there is no such minimum capital requirement in non-scheduled bank. You should satisfy various affairs done by you is actually in the interest of your deposit holder. So RBI will ask you, can ask you any time this question, but there is no such condition in case of non-scheduled bank. So likewise, you see, you have to hold some cash reserve ratio, minimum amount of cash reserve ratio as specified from by RBI from time to time. You see, there is no such requirement in case of a non-scheduled bank. Let's go forward. You see, now here is what I was trying to tell you in times in the discussion, in the context of discussion of classification of banks. These are the two banks category which were not there in that chart. So we do have payment banks. They are, you see, these are differentiated banking. This is coming under differentiated banking, means they do have a specialization in a particular domain, and hence they are given a limited operation license. Okay, payment bank, what they do, they are good in remittances. Any to and fro movement can be done very fast. Like migrant labor is good example of it. Small business, like you open a Karyana shop and you do have an app driven system where money can be received and you don't have any problem related to change. Yani if someone is giving you 10 rupee and you have to deduct 9 rupee 25 paisa, you see 0.75 paisa is a big challenge. Nowadays you don't see 75 paisa. So through these payment apps, it is all possible. You can pay in fractions too. Okay, and then minimum capital requirement is 100 crores. Then you see when it comes to a normal full-fledged bank, it is 500 crores. But here, because it is only partial license, so they are giving it 100 crores. You can accept saving deposit. Only saving account is allowed. Debit card issuance is allowed. Remittances is allowed. You can distribute mutual fund and insurance. So it adds to financial inclusion. Okay. So we are just giving you deposit facility, that too very much limited to saving accounts. That's all. No FD. So whereas you see in case of small banks, the small finance banks like Capital local capital, local area, small finance bank. You see, this is there in based in Jalandhar. So there again, situation is little bit different. So they actually focus your niche area. Niche area means a specific area where you will be dealing with the segment whom other banks are not able to penetrate. Like you will be going into rural areas. You'll be helping these self-help groups. You will be helping these, you see, joint liability groups. And if you look into the portfolio of these small banks, you'll find mainly they are catering into this segment only. So minimum capital requirement again 100 crores, CRR SLR as per normal requirements. 75% of your total loan should go into priority sector. See, this is what is very important. So small finance banks, they are required to give 75%, means majority of their loan to be given to priority sector. Second specialization what they have is like 50% of their loans need to be under 25 lakhs. Just imagine what they are doing. Just doing small ticket loan. 25 lakh is not small ticket. But comparing it to any other public sector bank or any other private sector bank where volume of certain loans may go into crores and crores, here 50% of their loan, at least 50% of their loan, it can be more also. So at least 50% of their loan needs to be below 25 lakhs. What it means is they are dealing with small counterparties. Okay, very good. So hope you have some idea about the structure of banking that we have in India. Thanks. Take care. See you later.